Investment in agri-food tech startups is at its lowest point for 6 years. In 2023, the sector represented just 5.5% of venture capital dollars invested versus 6.7% in 2022 and 7.6% in 2021. So what, if anything, are we to read into all of this?
So that's a decrease from prior years. Those were also record years as well. And when we started Germin8 in 2017, that number was more like 3.5%. So I still think there's a big delta of opportunity when you factor in just how big agri-food tech is and how big agriculture is as a contributor to GDP, about 20% of GDP and the world's largest employer, both facts that also mentioned in the report. And that's what drove us to really even start Germin8. Now, I think that it is markedly different than investing in your normal SaaS opportunities and AI and computation. And we actually look at investing in ag and food tech as being a lot like investing in medical devices and pharmaceutical technologies. In the instance where you're building digital technologies, it probably follows a path that's a lot more like medical devices, and that can be a lengthy path with difficult adoption cycles. And with when you move from looking at bits and bytes on the field to biochemical bonds, it's more like pharma. And not only is it a long development path and also a long adoption cycle, but it's really the regulatory part that is a significant barrier. And so I think we have to be patient capital.
I mean, if you've looked at some of the successes and the failures over the last few years in this sector, I mean, has there been too much tech for tech's sake or throwing money at tech that's maybe not ready for prime time?
It's absolutely, sometimes we see, actually oftentimes we see too much tech for tech's sake. We like to sometimes say that, you know, there's opportunities that are trying to kill a flea with a steamroller, and it's just unnecessary when a hammer will do. So we're looking for the technologies that are built for purpose, that are solving a significant need, that change the world of the user in a good way without changing too much, right? Not being friction.
I mean, we've seen relatively few exits in agri-food tech over the past few years. Is this something to worry about, or is this just a reflection of the fact the industry is still pretty young?
I think it is something to be concerned with, because as investors we have to provide liquidity for our LPs, and in order to keep investing in these types of innovations, we have to have successful track records. That's how we raise the next funds, that's how we deploy more capital into the system and solve these problems that are very noble problems to solve. Now there's good indications that the landscape is maturing and that exits will be there. But at the same time, there's also a huge backlog of unicorns. So actually, there's more privately funded venture-backed unicorns currently today than there are billion-dollar-plus market cap companies on the public markets that are in tech. So comparable companies, which is crazy to think about. And actually, the number of privately backed unicorns, and this is overall, in 2013 was about 40, and today we have 1,360 unicorns. And at 2021's elevated rate of IPOs, it would take 10 years to clear out that backlog. So I think in terms of thinking about exit, IPO is possible and great opportunities, and there's multiple ways to IPO, but we should also be very diligent about building companies for the long run, being sustained companies that themselves can grow into being incumbents. I think that would be the greatest demonstration of success in what we're doing. But also M&A, positioning these companies for outsized M&A exits based on what is it worth to that acquirer.
When it comes to what is getting funded now and why, can you speak a little bit to that, you know, within this sector, and what are you excited about?
We're seeing a lot of emphasis on software. At least when we're looking at ag tech, it's a lot of on-farm software that has a realized value proposition and has proof of concept. And I think investors, there's a flight to quality, and they're associating traction with quality and product market fit. So we're seeing a lot of those types of opportunities getting funded, and actually a lot of times it's not the same flashy whiz-bang type of technology opportunities that you saw getting funded in 2021 and 2022, but much more sensible technologies that are solving the problems more elegantly and without long technology development cycles.
2021 to 2022, there was a 42% drop, and then 2022 to 2023, there was a 49% drop. So everyone is kind of wondering what's 2024 going to look like. Where do you sense we are in this kind of down cycle? Have we hit rock bottom yet, or are we going to see another 50% drop this year, do you think?
Yeah, I think we've hit a stable zone here. I don't know if it's the bottom in particular, but I think that actually we've returned to healthy market dynamics. So we've returned basically to pre-2021 levels. And like I said earlier, when we first started out, the amount of venture funding that Ag and Food was capturing was only 3%, 3.5%. So I think that we've still made improvements in the sector over this period of time, but we've seen in venture capital in general, it was a bruising year in 2023. So about 40% decline in funding. In Agrifood Tech, as you say, 50% decline in funding. But the number of deals that have been done have been relatively less impacted. I mean, still notable, 26 to 30%, depending on what you're looking at. And so this indicates smaller rounds at lower valuations that are more attractive for the investors. And I think that this helps bridge the divide in expectations that we've had over the past several years. But over the past several years, it didn't feel like there was a divide because investors were pricing very low discount rates or cost of capital in their investments. And so I think we've returned to sensible dynamics now. And we are seeing positive signals as well in terms of this being a great investing opportunity and the market positioning for a bright future here. So we're seeing the Russell 2000, which is an interesting proxy for small cap growth stocks, is receiving new interest and has climbed. And we've seen returned optimism to software as a service as a category in the public markets as well. And you've got AI that is launching a new tech cycle. And so we think that there's a lot of opportunity abound.
Have you seen, is your focus in your portfolio kind of changing? Has it evolved over the years? Are there some areas you're now steering well clear of? Are you broadening your focus?
Yeah, we're still the same Germin8 that we set out to be. But one thing that we've recognized over the investment of our first fund, now we're investing out of our second fund, is that sometimes the breakthrough technologies that map really well to a very positive and impactful food and agri thesis might originate outside of the sector. The same is also true the other direction. So CRISPR began with food research, for example. But this means that we've been targeting other opportunities in what we call frontier science and computation, where we want to be able to invest in the best science, the best technologies, regardless of where they originate, knowing that they still will have an impact on the food and agricultural system in a very meaningful way. It might even happen after our liquidity event from that given company. It might even happen way later than that. But we should still be investing in the best opportunities, the best science. And this also helps position our fund for returns at quantums and market dynamics that are outside of the sector. So it's an interesting way to diversify our portfolio and manage a proper balance so that we can have multiple shots at goal with respect to liquidity events. So in 2023, we led a round in an AI company called Matterworks based in Boston, which developed not a large language model, but actually a large spectral model for biology. So raw biological spectra, it has no semantic foundation. They built a semantic foundation for biology, for raw biological data, and that serves as a foundational model on which they're building multiple fine-tuned models for various applications that each one independently is very venture-worthy and has huge market opportunity. And the first one is targeting users of mass spectrometry, which is an important workflow in labs. And we see a lot of opportunity with this. And this is just one example of a company that we've invested in that frontier science and computation vertical. And it has very meaningful application in not just biology across life sciences, but industrial chemistry and food science and agriculture and breeding. So we see that this can usher a new revolution in food and agriculture.